As risk-free rates face a structural decline, a massive migration of capital is underway. Trillions of dollars are moving out of traditional savings accounts and into global markets in an aggressive search for yield. To outpace inflation, many families are over-commercializing their holdings. They are pushing capital into high-volatility technology and digital growth sectors, hoping to capture enough upside to secure their future. This focus on offensive growth often leaves the family's most critical asset, their own human ecosystem and income-generating capacity, entirely unprotected and exposed. In this environment, the active pursuit of maximum wealth often engineers the exact structural vulnerabilities that lead to a total loss of safety. Actuaries prioritize a metric called expected shortfall. Instead of looking at average market gains, we analyze the extreme left tail of the return distribution to calculate the damage of a worst-case scenario. A black swan event, such as a sudden health crisis, hits this tail risk zone. For an unprotected family, this immediately freezes core cash flow. Forced to pay for survival, families find themselves liquidating their volatile tech holdings during a market crash. They are locked into a permanent loss of capital at the worst possible time. Portfolio failure here stems from a lack of a structural firewall, turning a temporary market dip into a permanent wealth destruction event. Institutional risk management at firms like Goldman Sachs and UBS avoids these traps by abandoning the safe-ish middle ground, assets that offer neither high growth nor absolute protection. They utilize a barbell asset allocation strategy. This architecture splits the portfolio into two distinct extreme ends. The left end is dedicated to offensive capital. This is where you place high-conviction, volatile investments like tech unicorns and AI equities to capture long-term growth. The right end must be comprised of heavy, legally binding defensive contracts. These are the anchors that stabilize the fluctuations of the growth side. Safely capturing extreme volatility on the left requires the existence of enforceable legal protection on the right. For high-net-worth investors, this right-hand anchor often utilizes Hong Kong's financial jurisdiction. The common law framework here allows insurance companies to allocate 40% to 70% of their assets into global equities. This structure enables critical illness policies to function as a high-leverage financial put option on human capital. These are contracts where a small premium secures a massive, growing block of contingent capital. When a health event triggers the contract, the multiple claim mechanism injects millions in tax-free cash into the household, replacing the frozen income stream instantly. This liquidity acts as a firewall. It absorbs the financial shock of the illness, allowing the growth assets on the left side of the barbell to remain invested and continue compounding. By utilizing these contracts to lock in a wealth floor, a family ensures their core capital survives any crisis, allowing their offensive investments to capture long-term gains uninterrupted. The barbell strategy aims to engineer the psychological capacity to remain calm during market chaos. Securing a contractual floor for the family grants the audacity to hold on to high-growth assets during their most volatile periods, capturing the biggest wealth dividends of the decade. Financial freedom requires the actuarial mastery and isolation of risk, rather than the avoidance of it. This change in risk management is shifting the entire wealth management industry. The days of relationship-based insurance sales are fading as clients demand more sophisticated, data-driven solutions. The next decade will be led by the top 1% of advisors who master actuarial consulting and cross-border risk structures. For families whose current portfolios are exposed to tail risk, I recommend an actuarial stress test of your existing assets. For professionals seeking to move beyond sales and into high-level advisory, we invite you to join the team at Prudent Edge Solutions. I am Vincent, an investment actuary. Let's build your wealth on a foundation of certainty.